Welcome to The Explainer. Today, we are unpacking a really provocative concept that's been making some serious waves in recent market analysis. We're looking at a strategy built around a very specific economic phenomenon, one that claims the potential for absolutely exponential wealth growth.
So, turn $1,000 into $10,000? Now that is a seriously compelling question, right? What if a $1,000 investment today could conceptually turn into 10 grand simply by front-running one powerful market shift? Now look, we aren't here to give financial advice, but we are going to impartially map out the math and the logic behind this potential tenfold increase. How exactly does this mechanism work, and what's really driving the underlying theory? Okay, let's dive into this. $10,000. That's the conceptual scale we're evaluating today. The underlying analysis insists that this isn't just internet hype, but a very real, structural market event known as a Silver Supercycle. But to understand how $1,000 could mathematically multiply to that degree, we've got to look under the hood at the actual mechanics of the trade.
Which brings us to Section 1, the 10x opportunity. Let's look at this exploding demand.
You see, this theory completely reframes our traditional understanding of silver. It is no longer just a shiny metal used for jewelry or, old coins. It is actively transforming into an irreplaceable industrial asset. We are seeing literally exploding demand from massive future-facing sectors, specifically solar panel manufacturing and electric vehicles. Just to put this into perspective for a second, building a single EV requires nearly 2 ounces of silver. That is significantly more than what's used in your traditional gas-powered car. Now, multiply that by the millions of electric cars entering the global market right now, and you start to see the sheer scale of consumption. But here's the catch. Supply is fundamentally failing to keep up, and it's this exact collision, rocketing demand meeting stagnant supply, that analysts argue could trigger a massive, massive price surge.
Moving right along to Section 2, what exactly is a supercycle?
To really ground this strategy, we need to define the parameters of a supercycle exactly as the source does. A supercycle is a long-term trend where demand massively outweighs supply, causing prices to rise for years, not months. Notice the timeline mapped out here. This is absolutely crucial. This isn't about catching a quick monthly stock spike or day trading some fleeting momentum. A supercycle is a sustained, multi-year economic tidal wave. It fundamentally shifts the valuation baseline of the entire asset over a much longer horizon.
And the thing is, analysts point out we don't have to guess what this looks like, because there is historical precedent. We've seen this exact phenomenon play out before in major markets like oil, gold, and real estate, creating immense wealth for those who position themselves correctly. The core thesis here is a growing belief among market analysts that silver is basically next in line for this historic treatment, thanks to its unique industrial footprint.
Let's move into Section 3, the perfect storm for silver and what we call the structural signal.
So let's look at the specific market forces driving this theory. The pressure is tightening from 3 distinct sides. First up, industrial demand is rising incredibly fast as all these new technologies evolve. Second, mining production is actually slowing down. It is getting harder and progressively way more expensive to extract high-grade ore from the earth. And third, governments worldwide are aggressively pushing green energy initiatives and infrastructure bills, all of which heavily rely on silver components to even function.
And this brilliantly illustrates the core tension of the entire argument. As the analysis states, this creates a perfect storm, where demand keeps rising, but supply stays limited. It's basically a demonstration of classic economic principles pushed to an extreme limit. Global green technology ambitions are actively colliding with shrinking mining capacity, putting unprecedented, compounding pressure on the price of the underlying commodity.
So how do we handle this? Section 4, the supercycle strategy.
Pivoting from the why to the how, the analysis provides a very specific 4-step strategy for retail investors to capitalize on this trend. Step 1 is to invest early, way before the mainstream hype takes over and retail euphoria sets in. Step 2 requires holding during inevitable volatility. Honestly, an iron stomach is absolutely required for commodity markets. Step 3 suggests scaling into the position by buying on the price dips. And Step 4 is to stay patient. The strategy explicitly notes that supercycles reward those with the discipline to wait out a years-long trend rather than just cashing out at the very first sign of friction.
Now this brings us to a fascinating look at behavioral psychology. The analysis draws a really sharp contrast between smart money and the crowd. The harsh truth of the markets is that most retail investors enter far too late. They follow the herd only when the headlines are blaring and prices are already sky high. Smart money, however, they move early. They position themselves well before the headlines even catch up to the structural reality of the market, locking in their cost basis way before the widespread recognition phase even begins.
But let's shift gears for a second. Section 5, the reality of risk.
It is absolutely vital to cover these essential caveats because no investment is ever risk-free. Silver can be incredibly volatile. Prices absolutely can and will drop in the short term, sometimes really sharply. The mandate from the source here is crystal clear. Anyone looking at this strategy must do their own due diligence, deeply understand commodity cycles, and never, ever invest money they cannot afford to lose. The path to a potential 10x return is incredibly turbulent. It is absolutely not a straight line up.
Bringing it all together, we are left with this extremely bold thesis statement: the silver supercycle might be one of the biggest opportunities of this decade. Now, regardless of whether one chooses to act on it, the scale of the claim being made by analysts here is undeniably massive. It's a macroeconomic argument built on the very real physical limitations of our planet, intersecting directly with the boundless, mandated ambitions of global green technology.
Which leaves us with a lingering question that perfectly summarizes the behavioral challenge of investing. Will you see the signal early or follow the crowd later? It is certainly a provocative thought to evaluate as you watch the commodities market unfold. If you found this breakdown valuable, remember that smart investing always starts with smart information. Thank you so much for joining